Measurement. Here measuring means quantification including estimates of business transaction into financial terms by using monetary units, namely rupees and paise are measuring unit. That's what known as measurement. If an event cannot be quantified in monetary terms, it cannot be considered for recording in financial accounts. That is why important items like the appointment of new managing director, signing of contracts, or changes in personnel are not shown in the books of accounts. Number 4. Recording. So here in recording, it tells that what is the economic event. So you all know that what is economic events. Economic events are those events or happenings of consequences to a business organization which consist of transaction and which are measurable in monetary terms. Then there are two types of economic events, that is external events and internal events. So these all I have explained you already in point number 1, economic events. So with regard to recording, once the economic events are identified and measured in financial terms, these are recorded in books of account in monetary terms in a chronological order. So we need to mention the date on which day what transaction has been taken place. That is what known as recording. How much amount you have spent or how much amount you received. These were included in recording, and basically it should be a financial character. So here tells us the economic events are identified and measured in financial terms. These are recorded in books of account in monetary terms and in a chronological order. Recording is done in a manner that the necessary financial information is summarized as per well-established practice and is made available as and when required. Number 5. Communication. The economic events are identified, measured and recorded in order that the pertinent information is generated and communicated in certain form to management and other internal and external users. The information is regularly communicated through accounting reports. These reports provide information that are useful to a variety of users who have an interest in assessing the financial performance and the position of the enterprise, planning and controlling business activities, and making necessary decisions from time to time. The accounting information system should be designed in such a way that the right information is communicated to the right person at the right time. Reports can be daily, weekly, monthly, or quarterly, depending upon the needs of the users. Listen carefully. An important element in the communication process is the accountant's ability and efficiency in presenting the relevant information. Number 6. Organization. Organization refers to a business enterprise, whether for profit or not for profit motive. So there are two types of enterprises. One is there for earning profit and another is there to provide service. That's what known as not for profit motive. Depending upon the size of activities and level of business operation, so this organization can be classified into sole proprietary concern, partnership firm, cooperative society, company, local authority, municipal corporation, or any other association of person. Number 7. Interested users of information. So here in this point, let's see, first of all, accounting is a means by which necessary financial information about business enterprises is communicated and is also called, important one, the language of the business. Many users need financial information in order to make important decisions. So these users can be classified or divided into two broad categories. That one is internal users and another one is external users. So with regard to the internal users, let's see who all are there included in the internal users. One, that is what chief executive, financial officer, vice president, business unit managers, plant managers, store manager, line supervisors, etc. Whereas in external users, it includes present and potential investors, that means shareholders, creditors, including banks and other financial institutions, debenture holders and other lenders. Tax authorities, regulatory agencies includes Department of Company Affairs, Registrars of Companies, Securities Exchange Board of India, Labour Union, Trades Association, Stock Exchange and Customers, etc. Since the primary function of an accounting is to provide useful information for decision making, so it is a means to an end, with the end being the decision that is helped by availability of accounting information. So students, you will study about the types of accounting information and its uses later in this chapter.